It is the 24th of November, so I'm recording this for the week starting 26th of November 2018. Dollar index. I usually like to start on dollar index, try and give me some idea of where the dollar's going. You can see for the last month and a half or 2 months, we've been in this upward channel, and we're just holding because we bounced on Friday from, well, we bounced on Thursday from 96.31, so that was just above my support level. Actually, I had the support level just above there, so anyway, at least it held. Bulls are still in control, so that's what we're looking for. Now we've just managed to beat the week, the high for the week that was set earlier in the week at 96.89. There was some strong resistance up there. 95, had 96, 70, 96.80, I do believe was my resistance level. So the fact that we're just managing to close above there on Friday does look positive for next week. For all these reasons, we're in a longer term bull trend anyway. Been in a bull trend all year. We're in this new bull trend channel over the last month and a half or 2 months, and we've held support, and we beat the minor resistance around 96.70, 96.80. So for those reasons, as you can see, the outlook is positive for the start of next week. I wonder if we can get up here and retest the November high. Now that will be the big test, because do we get a double top, and then for a sell signal? That will be significant when we look at the weekly chart, because we've got this rising wedge, which is more important than what you're seeing on the daily chart. This rising wedge, which certainly has done the job on the last, well, this peak here created that trend line, of course. And then the third test of it, we really did get this negative candle. If we were to get another negative candle like this, spike up, long upper wick, red body, that kind of thing, shooting star type thing on a double top at the rising wedge, then that would pretty much, well, it would certainly seem likely that we would head back towards the 200-week moving average. We bottomed just above there this week, and then also test this lower trend line, which will be meeting up around the same area, won't it, by the time we get there the following week, which would be around 95.90, 95.80, and then obviously a break below there would be our sell signal in the medium term. We could get a decent swing trade out of this at last. Okay, having said that, looking at the weekly chart on a slightly bigger perspective, if we do break above the trend line, or at least break above the November high at 97.70, call it, we've got a little bit of fib resistance, which is, I think, less important, up at 97.87. But just keep an eye on that. Once we're through 98.00, that should be a screaming buy signal. There's really nothing in the way of a huge rally up through 98.55, 99.25, and really up around the 100 area. And you can see some minor fib resistance at 150. I really don't see why we can't get to 150. So if we're buying it above 90 on the break above 98, we really could have a 250 pip swing trade in there if we could just hold on to it. It won't move in a straight line. It will chop up and down on the way, but it would be worth having a small position that you can just hold on to, forget about, and see if it does move up to that 150 level into the beginning of next year. Okay, Aussie dollar is trying to stage a recovery, but this looks like it's faltering. I had hopes that we were going to get a swing trade out of this, but anyway. Again, it looks like the US dollar can strengthen. So you can see we've not been able to remain in this upward channel here, and we just seem to be breaking down. Well, Friday was the clear breakdown, so we couldn't get up through resistance at 72.85.95. As you can see, the high was 72.57. So what did we do on Thursday? 72.68. So we've really reversed from that 72.85.95 resistance. It didn't work in the second half of the week. It did work in the second half of the week, and we couldn't get through it. Now, I didn't think that 72.15, 72.05 would hold. I thought there was a risk of a breakdown. You can see that some of that comes from this 38.2% fib support there, but actually, bang on, it did hold. So this will be the level to watch now. Break below 72.00, 72.05 anyway, will be quite negative for Monday, and we could eventually sink down to, well, 71.85, 71.75 would be the next stop, not a million miles away. We'll have to see what happens at this support level. If that holds, then we can take off again. Obviously, if it breaks, it's going to look pretty nasty. This is a significant trend line, so it will be the most important support level for the week. As I scrunch this chart up, you can see it goes all the way back to February. So it's a really, really long-term level. It's what, 10 months old, this trend line. So it is quite important. On the upside, what's important? Well, definitely 72, 80, 72.90 again, because we've got the 23.6% fib there on the longer term, well, going back to, what is it, February. So yeah, that's pretty long term, same as the trend line. And then this shorter term trend line, which is only a month old, but still relevant. So watch 72.80, watch and 72.90. A break above 7,300 is positive. Watch this support level down at 71.85, 71.75. Break below 71.70 is negative. Those are the levels to trade. The Kiwi, New Zealand dollar had a good run up. We got overbought. I did warn about this area. I did warn about the 68, sort of 80, 68.90 area. It was a 200-day moving average that stopped us, and I had a feeling it would, just because we'd had such a strong run up. So we reversed. We've drifted low. We haven't exactly collapsed, but the fact that we're not able to hold above 67.70 would be, if we don't hold above 67.70, we tried a little break below it, then that would be quite negative going forward. This chart does look quite negative. We know we are in a bear trend. We've held the 200-day moving average, so I would favour a move to the downside, just as I favour a stronger dollar at the beginning of the week. So we'll see what happens. There's not really any significant support until we get to 66.60, 66.50. So it could be worth a short. If we can't hold above 68.00 and we do move below 67.70, it could be worth a short. This isn't the best level, 68, 67.95, 6800 to be putting a short on really. But anyway, I do think that we could head down towards 66.60, 66.50. So the dollar yen, for obvious reasons, I had us selling up around the 113.00 area. We overstretched that to 113.14 on Wednesday. Hopefully not enough to stop you out of the shorts. It shouldn't have been. Having said that, we haven't really seen any decent profit on the trade, being short up around 112.90, 113.00. We did get down to 112.63 on Friday, but we've bounced back. I still have to believe, we still have to be short. You can see the trend line. You've got the 23.6% fib. You've even got the 55-day moving average coming in around 112.95. So there's quite a lot of resistance up there. We're not we're no longer oversold, put it that way. Let me just have a quick look at the weekly chart. We've got the 200-week moving average. Where does that come in at? I think that comes in around 112.95 as well. So yeah, I'm going to stick with the short trade. If you're still holding it, I think you're okay. Obviously, we're going to have to get above this trend line next week, which is 113.15. We're going to have to really push up through 113.20 for me to change my mind, and then I will have to assume that the longer term bull trend, which started in March, is still valid, and we will push higher. Just going to quickly have a look at some trend lines here. I've just cleaned this chart up a bit. So assuming I'm right, and assuming we do hold below 113.00 and head lower, this will be my target. 112.25, 112.15 for profit taking. We've got fib support, good fib support, 100-day moving average, and a trend line. That's good enough for me. We'll be a little bit oversold on the slow stochastic as well by that time. So this will be our buying opportunity. We're in a bull trend, so I'll assume that this will hold. This will be a buying opportunity, and hopefully we'll be able to then run that up around 100 pips or something and take us back up to here. That would be the dream. Let's see if that works. This look, the long down here looks even better than the short up there. So I'm really hoping that we get a chance to buy down there. Right, Euro US dollar. We are clearly in a bear trend for this year. We have, however, held the 200-week moving average, so there's some hope for bulls in an oversold market on the weekly chart. Now, as you know, I think the dollar can push a little bit higher this week, so maybe there is some downside for the euro. I think if we hold below, I had 113.60.50 as a level. Just give me a sec. Right, I had strong resistance at 114.40, 114.50. We topped 7 pips below that. If you were lucky enough to get into a short position, that obviously worked. I had my target down at 113.60, 113.50. So anyway, if you were lucky enough to be short from just below that level, there was a real nice profit in that trade. Now, we didn't hold 113.60, 113.50 support. I had that as support, but I didn't give you a buying opportunity with a stop because I was worried we'd break below it. So holding below 113.50, we closed below on Friday, is more negative for the start of this week. just be aware we've got this potential inverse head and shoulders pattern. So there's the left shoulder, there's the head, there's the right shoulder. Now we can dip down, we can go at least as low as 113.00. You know, we could even have a dip to 112, the mid 112 area, and then turn around, and still this pattern would be relevant. So you remember I showed you the rising wedge pattern on the dollar index. If we retest that high, as I suggested we might do, we will come down significantly in the euro, but we can still bottom out when the dollar index tops, turn around, break above the neckline, and complete the inverse head and shoulders pattern for a bull signal. So I'm talking way ahead now, days, possibly even weeks ahead. But let's just see how that develops. This is my theory. We'll see if the dollar does reverse on a retest of the November high. Now, we could continue down as far as, if the dollar does have a real good run up to retest the high for the US dollar, the euro could retest the November low, and we could then get a double bottom. So watch for either the inverse head and shoulders or the double bottom, but a break below 112.00 is going to be a significant sell signal. I won't really be very happy with the market below 113.00. We'll just have to keep up to date on that. Below 112.00 is there's really nothing. We could really vacuum down quite quickly. So there's a lot to watch, put it that way. Right now I wouldn't really have a position, but there's certainly a lot to watch, and we could get a real nice signal into December. The Canadian dollar I'm finding very, very difficult to trade, and it's obvious why. You know, up for a day or two, real big moves, and then they just absolutely reverse. So you can't run a trade for more than, well, certainly more than 2 days. A day really is enough. You just never know when this thing's going to reverse. If you're scalping, it could be quite a nice market, but I'm finding it tough. Anyway, the levels seem to be working, having said that. We stopped just short of the trend line up here, which was really where I was hoping to get short. That was up at 133.30, 133.40. Well, we topped just below, 12 pips below it. If you managed to get into a short, well done. If you managed to run it down to our buying opportunity at 132.00, 131.90, that would have been a nice trade. Getting long here though, there was no excuse not to. That was our buying opportunity. Stop below 131.60. So this was a real nice trade Friday. I'm not finding this chart easy to read, but I'm well happy with those two potential trades if you did them. We bounced on Friday from 131.79, so a good run up to 132.58. I had a target of my first target of 132.40.45. So yeah, decent enough. 50 pips in the bin. That'll do for me on a Friday afternoon.